Welcome to AGORACOM Small Cap Best of the Best TV. I'm George Tsiolis, founder of AGORACOM, and with us, as always, Allan Laboucan, our chief market commentator. Allan, say hello.
Hello, everybody. It's the last show of 2015, and our most previous show was the tax loss selling contest. Oh, 2015. I saw you smile there, George. Last show of 2014. Our most recent show was our tax loss selling contest, and in that show, George and I each came up with 6 picks, and we had a list of, George and I both had a long list of companies that didn't make it, but we wanted to talk about some of those today, and we've got some trends to talk about. So yeah, that's what's on the docket for today.
And then we'll end with where we see TSX Venture Small Caps going in 2015. Now, before we get to any of the secondary picks, you know, the picks that didn't make it, the also rans, I want to give out a little bit of props here because. Let me get to a screen share. Give me a second. I saw something pretty interesting last night. So give me a second because I'm at the home office and I've got to. I've only got one screen to work with here.
Yeah, no worries, George.
But you're all gonna like this. And here it goes. You see that?
Yeah.
All right. So last night I was watching BNN just by fluke. I don't know why. I think I was just kind of cruising the channels. I saw the commodities show was on. And I said, let me watch this for a second. And who do I see? Brent Cook, a pretty prominent newsletter writer, talking about where he sees the venture going in small caps. Had a lot of things to say. But what I found really curious was this right here. Cook, too much money diffused across zombie companies on the venture. Where have we heard that before? Brent owes a royalty payment. That's why I put this out on Twitter last night. He owes a royalty payment to Allan for that because Allan coined that phrase at least a year and a half ago. For the record, it was a year and a half ago, and even earlier that when him and I would have our conversations. But in our first show back in what we called our 7/11 show, our July 2013, July 11, 2013, Allan, you came up with that zombie, dormant, and leaders. And that's how you and I analyze a lot of the companies that we pick. And I just found it funny that Brett's using the. You think he's watching, Allan? What do you think the situation is like?
Yeah, I don't know if Brent Cook is watching our show or not, but it's nice to get recognized for that, George. Thanks, man. Yeah, I actually went and did a little search through AGORACOM after I saw that tweet because I remembered I thought I wrote an article about it as well, but we did a show on, or I did a show on the buckets because I was talking about buckets at the time, how I was trying to put companies into different buckets, the zombies or the dormant companies or the leaders, and I guess it's becoming a little more trendy now to use that with guys like Brent Cook talking about zombie companies.
Well, we'll have our lawyer send a letter to him ASAP and see how much money we can squeeze out of him for you.
Cease and desist.
Cease and desist letter. All right, let's go into a couple of picks. Why don't you start? You want to start?
Well, actually, George, I was thinking there's a couple trends that I wanted to talk about before we go into the picks. Do you want to start that way? Or do you want to
sure. Yeah. Okay. You're the chief market commentator. Tell me what you want to talk about.
Well, I'm seeing a couple. I'm a big trend sort of guy, George, and I'm seeing some seasonal trends that are sort of clashing a little bit, if you will. And this is something I've been talking about lately. One of those trends that we see is the reason we started our we did our contest, the tax loss contest. Last year we've talked about it a lot. My returns in that contest window, which was from about mid-December to end of December or end of January, was 47%. George's 6 picks from that same window was 33% for an average of 40%. This is one trend that works time and time again for me, George. It's one of my favorite trends. But we're seeing something with the Santa Claus rally is suggesting you want to look at the Santa Claus rally because it often indicates what's going to happen in January. And there's a big believers out there in the January effect. You've heard that a lot. It really comes from a guy named Yale Hirsch, who wrote the ground floor newsletter. He's a pioneer in the newsletter business 30, 40 years now. And it's suggesting to me, I'm looking at the stocks, and if you get a Santa Claus rally in stocks, often that's an indication that the January is going to be good. And so as the general stock market has been going up, the stocks that I pick in the tax loss selling have been under pressure. So you see what I mean? Why we've got this conflicting trends here, George. Is the tax loss selling candidates and what we expect to see in January from those picks going to be the big winners, or is this, should we pay more attention to the Santa Claus rally and the January effect, which is saying stay bullish on stocks? So that's something that I've been running around in my head with lately, and was wondering what you're thinking about that stuff, George.
I think the Santa Claus rally, because of the dates that Christmas and New Year's are falling on, dead smack in the middle of the week, is muted this year, and we shouldn't put too much into that. What's happening when you have Christmas Eve fall on a Wednesday, people are out Wednesday, Thursday, Friday. That's it. New Year's Eve falls on a Wednesday, so they're out early. New Year's Day, Thursday. Highly likely to do it.
That's a good point, and we saw that in the volume.
That's why you haven't seen anything going on. I think it's too early to tell. So people are going out on Monday, Tuesday, but they're not really doing anything aggressive because they know they're going to be out Wednesday, Thursday, Friday, and then next week they're going to do it again. So I think what's happening is people just have parked the bus, and they've said it's been a tough year it's been a tough year as it's been in small caps anyways. So they're just going to finish out the year, not do a whole lot. That's why you're not seeing a lot of volume, a lot of things happening. And they're all going to come back on January 5th. And at that point, we're going to know, by the end of the month. But I believe you stick to what's worked, which is people still want to buy cheap small cap stocks. They're going to find the ones that were sold off, and they're going to buy them. They're even going to buy back their own. Remember, if I sold ABC company at a loss on December the 15th at 25 cents, January 15th, I'm allowed to buy that position back. I can't buy it before that because the government, tax rules say you have to wait 30 days to buy back a position or you can't claim a tax loss, right? So I still think there's no reason to believe why we're not going to get a bump. The TSX Ventures down this, you and I bottom ticked it, so congratulations, you and I again. December 16th, we hit the absolute bottom of the venture again. So I think that says a lot about, so I think we know what we're doing, and we just got to give the market time to get its feet underneath it and figure itself out. But I'm pretty confident that that a lot of these companies that we picked are going to do very, very well, because we pick companies that are great from a fundamental point of view, and they got beaten up from a technical point of view. So odds are we going to get 47 and 33, or are we going to get an average 40% return? That's the part that my gut tells me probably not because we didn't make great picks, but there's a little more caution out there in small cap world trying to figure out who's who. This is what I do know for sure. At some point, we're going to get a massive move in small cap stocks, Canadian small cap stocks. And I don't know when that's going to be, but I'm pretty sure it's going to be sometime in 2015 when people say this is just nonsense and the zombies are gone and the leaders got to be bought, and that's it. IDM at 13.5 cents. That's just a ridiculous price for companies like that. There's just too many companies that are beaten up, and I think that's going to happen. So does it happen in January? I'm not sure. Does it happen halfway? But it's going to happen. This is going to happen for sure.
Well, and that made me, that what you're saying there made me think about something else too, George. I often try to look for other sectors or that are moving in January, and as an indicator of what's going to happen for the rest of the year. A lot of that has to do with mutual funds window dressing at the end of the year and then trying to jump on the bandwagon of what's going to perform well in the new year. So I think that's why you do have to pay attention to the January effect. And we don't necessarily have to see the resource small caps rally on their own and not the big cap stocks. I mean, the big cap stocks can keep going up. There's no reason why they can't both get going.
Later, I don't think I've seen this stat. And I think once I said about 6 months ago I was going to look into this, but the divergence between the Dow or the S&P, whatever one you want to pick, and the venture exchange has got to be, I would have to presume it's the biggest it's ever been. And that can't continue, right? You can't have large cap stocks massively outperforming and these junior stocks massively underperforming. Not for very long. You and I both know extremes like that. So either that doesn't mean the small caps are necessarily guaranteed to bounce, but either the large cap guys come down, because right now I bet you if you're looking at a chart, you can see both my hands. Let's say these are the large caps and this is the small cap index. What's happened over time is, traditionally you might have that kind of a spread, and what's happening over time, you're getting this kind of a spread. So the Dow and SP are up here, you can't even see my hand. The S&P is down here. I mean, the TSX Venture and small caps down here, can't see my hand. That can't last. So one of two things is going to happen. Either small caps got to come up. Oops, sorry, I just dropped something off my desk. Either small caps got to come up and close that gap, or, frighteningly and potentially, large caps got to come down and close that gap. But you just can't have that kind of a divergence. What do you think?
Well, you bring up a really good point, and there's something that, I've been concerned about the valuations on the big cap stocks for a long time. The biggest concern that I have with the earnings of those big cap stocks is the valuations relative to the earnings growth. So they've got, you've got the Dow trading at about 17, 18 times earnings, and yet the earnings are only growing at about single digits to maybe 10%. That's a pretty high PEG ratio that makes me very nervous.
Here's what's scarier. Sorry, I hate to interrupt you, but here's what's scary about that, Allan. It's pretty much everyone agrees that earnings growth, quote unquote, a big part of that has come from share buybacks by these companies. They're buying up their stock, they're reducing the number of shares out there, so they get this, nice price earnings ratio, because they're decreasing the amount of stock they've got out there, but they're firing people. But how long can that last for?
Yeah, so what you're saying is
that earnings growth even real at the end? Are these ratios even real at the end of the day?
Well, that makes a point of the quality of the earnings growth. That wouldn't be considered a high quality. You'd rather have the, consumers causing you to hire more people and get more earnings growth. So you make even more of a stronger point to be worried is because that's not high quality earnings growth. That's sort of cosmetic earnings growth. And so, but having said that, everybody, there's a lot of people out there that are seeing that. The problem is now the Fed has complete control of the interest rate market. They are 70% of the market now is owned by the Fed. So how do you expect a big correction? What's the potential catalyst? And I do have a view of what I think is, but I want to ask you, what would be a potential catalyst that could stop that juggernaut? Here you've got the Fed completely in control of the yield curve, pumping liquidity into the market, which seems to be fueling the bull, and that can continue forever. The Fed can, now that they've got such control of the interest rates and own so much of the debt, they are in control of interest rates forever now. And so, how long can it continue? I mean,
I'm not calling for a market crash. I'm not calling for a market crash on the big caps. But I think sooner or later you can't continue this kind of growth. It's just not possible. Investors aren't that stupid at the end of the day. There's only so much they're going to be willing to pay for, the quote-unquote stability of the U.S. market thanks to the Fed. So, do I see a crash? No. If it was a free market, there should have been one by now. But clearly, things are being controlled and things are being orchestrated, and that's why you've got the markets where they are. But anybody in the right mind knows that the unemployment number isn't real in the U.S. Wage growth is non-existent in the U.S. Even the jobs that are being handed out are all part-time service jobs, low-quality jobs. People aren't buying. The consumer is just not moving. I don't care what you tell me; they're not moving. So sooner or later, the scary point is going to be what happens after the plateau, because the plateau is going to happen where people say, okay, we've done all we can. And then it's almost like the ship becomes rudderless, and does it just keep going with the tide and moving forward, or does it become, or does it get swamped by a rogue wave? But I don't think there's going to be a lot more room in the big major U.S. indexes, because it's petering out. It's just petering out. There are no more bullets left, and that's a scary part. So. Could there be a catalyst? China is the only catalyst I can think about that could swamp. It could be the rogue wave, because at the end of the day, if China's growth isn't real and they can't keep up their consumption, then we got a big problem around the world, right? So I continue to hate this bull. I continue to trade it, though, but I continue to be very ready to pick up out of the money puts and bearish calls against the market, because I think you could have opportunities for making big money there.
I think that if I were giving you advice, George, I would suggest that you might want to start taking some of those positions. I don't know what the catalyst may be, but I've been in the business for close to 30 years now, and I've seen a few times where what I'll say is that the bulls are complacent. It's almost like you just have to buy every dip and keep buying and buying and buying, and you'll be fine. I've seen this kind of scenario a few times in my career, and there's one catalyst that generally comes up that you just can't predict, right? I can't predict who it's going to be, but every time the market gets in this kind of a situation, what we'll see is someone who is capable of getting highly leveraged.
I knew you'd come with that. That's a good point.
Okay, is able to get highly leveraged to the point where we see one of these debacles where a rogue trader, those are generally the kind of things that are the catalyst that starts to put some pressure on the market. And I don't know what that catalyst is. I don't know the rogue trader, but I would bet you, George, that the people that could get to that kind of position, because we've been in a long-term bull market, have grown. And now, as long as the bull keeps on running, it's fine. But it's, one time that guy, makes a bad trade, pushes the wrong button, and it all, starts to unravel.
Well, it's ironic that you bring that up, because yesterday reading Doug Cass,
Yes.
Doug Cass yesterday put out his annual predictions for the year, and he had 15 of them. And one thing that he talked about. And maybe you should go look for it. All of you at home should go look for it. Doug Cass 2015 predictions. But one thing he talked about is and I didn't realize this. I almost have to go back and check it. But he said there's a $300 trillion derivatives market. Basically a very, behind the scenes, gray, dark shadows derivatives market. And he says sooner or later, something is going to break in there. And that's something you really got to be careful of, and that can bring everything tumbling down again. So
what ends up happening, George? It's almost like these traders become like a coke fiend or something, right?
And they don't care, because as long as they're making money right now, if and when the whole system collapses, as long as they're making their money right now, it's like, okay, well, it's like a buffet. If you can keep eating until the buffet is done, well, the buffet is done. My belly's full, and everybody else is going to be left with no food. But I don't care, because my belly's full.
Exactly. So that's, that risk is something that's, I just see that the market is it keeps wanting to push higher, but it's jittery higher, right? It's not like it's pushing through pulling back, pushing through, pulling back. It's sort of pushing through, and then it pushes through a bit. It's not like
big dips. It actually takes some pretty sizable dips. You get 1,000-point dips right now, right? Over a 2-week period. It's happened a couple of times this last quarter. We had October had that massive dip. Then again, I think in early December, didn't we have a dip down to the 17,000 range? Now the Dow's over 18,000. It took a week. It took a week to go from 17 to 18,000, but we've seen it a couple of times now, right?
But it just seems to me like that valuation story is starting to ring more true, and I'm really nervous about. It seems uncanny. Like every time, like right now, I'm looking for a catalyst. What is the catalyst that's going to shake out the market? And I want to see the big market shake out. I like bargains, and I like when the market is scared and frightened, and that's usually a great opportunity to find opportunities, a great timing to find opportunities. And so I'm always on the lookout for that, and every time I'm on the lookout for something like that, it's one of those left field things. Nobody predicts it. What I am predicting is that it's that we're in that inning of the baseball game where something like that can happen. Don't be surprised if it does happen in the next 6 months or sometime during this year of 2015 is what I'm getting.
I think Doug Cass actually said in that article, expect the unexpected.
Exactly.
So we'll finish it off. We'll finish off with this. We don't know. We don't. Obviously, we're at that point. Neither of us or anybody out there has specifics. But I'm going to end off with this. There comes a point when you need to put the charts away and everything away, and you need to bring. If you have a great-grandfather, a deceased great-grandfather, and if you bring him back to life today and explain to him, hey, no one, unemployment's still high. People aren't working. Participation rate is at the lowest rate it's ever been. There's no wage growth. People aren't spending. Governments are in debt. They're artificially trying to inflate things. That hasn't quite worked very well. They're running out of bullets. Sooner or later, someone's going to say, your grandfather would say, this is not a good situation.
You think?
Right? They're just going to look at you and say, this is not a good situation. You should be very, very careful because when this many things are artificial, sooner or later,
Well, I'm grandpa today. I'm grandpa. Yeah.
Yeah, and I think that's we'll end it off with that because otherwise we can't give more specifics to people at home as far as when but it just doesn't. And I've hated this bull market. You kind of liked it for a while, so you
actually, George, I was really bullish when everybody was bearish in around.
Actually, everyone should know that before we even start recording.
I think it was late 2010 or either early 2011 or early 2011. No, it was 10 to 11 there, and
you and I were on the floor of a conference, and I said, "Man, these markets can't survive this." And you said, "George, it's going to be a huge year."
Yeah.
And I went online and told everybody that a year later, I said, you really whipped my butt there on that call, big time.
Well, and it's this one scares me a little bit here, George. This market here, so I wanted to get that point across that there's things that I'm worried about. And and again, just like we had our you build up your tax loss selling list and in anticipation, and then when it happened, it was time. We knew it was time. And, we've already seen some gains. I think you want to be the same way. Have your laundry list of, if the market starts to turn to the negative, what am I going to do? And have that list ready to go. And
I already know, and I'll give people a hint that they should do their own work. Look at the highest PE technology companies, the high-flying PE technology companies, Tesla, Netflix, Amazon.
What about your ETFs? You've got your ETFs that short the market.
Yeah. But those ones you can buy those, but there's a lot of leverage if you start buying out of the market puts on stocks like Tesla and Netflix and companies like that, where money gets pulled off the table pretty fast. You can make some really big fast money. I've actually got that in my head. I've actually got those lists. I did it with Apple a couple of times. I made the call on Apple back during the financial crisis. It was traded at $200, and I said Apple's going to 125, buy puts. In fact, it got down to 90 or something. And then again, a couple of years ago, I was very vocal about Apple and the things that were happening. So Apple not as much anymore. They've done the reverse split. They don't have a high PE. They don't have a high PE ratio or anything like that. So I'm looking at other those kind of stocks that can you just have one or two of those and you can literally make $1 million in a month.
Yeah.
With a $30,000-$40,000 position or something like that. It's not that hard. So let's go into some picks because it is the people want to get to New Year's Eve and so why don't we briefly mention? Why don't we talk about you talk about 3 or 4 or 5 companies. I'll talk about 3 or 4, and then we'll end it there.
Yeah, I'm not going to go over the stock charts and everything, George, but one company I wanted to add, and it was I was considering adding it to my portfolio of picks for the contest, was a company called Painted Pony. Their symbol is PPY. They're an oil and gas play. They're a very high quality company. I was a little nervous about how much performance I would get out of them. I'm quite confident that PPY on the Toronto Stock Exchange will perform very well. I just didn't know if it would perform as well as my other oil picks, and that's why I leaned on. I had 4 oil picks out of 6 companies. Painted Pony didn't quite make it, but it is a high quality pick of mine. I wanted to talk about Fission Uranium, FCU on the Toronto Exchange. The reason that I didn't, George, Fission was because I'm a little concerned about the price of uranium turning around. I think it's in the start of a turnaround, but I was a little concerned, could it turn around fast enough for a 6-week contest for me? That's why Fission didn't make the cut, but I like Fission a lot. Another one that has been doing very well coming off the bottom is Lucara Diamonds. Their stock symbol is LUC. They also trade on Toronto. I'm very bullish on the price of diamonds. While most all other commodities have been under pressure during the last 2-3 years now, the price of diamonds have been going up, and so they're, if you value them in American dollars, they're outperforming the American dollar, which has been outperforming practically every other currency and pushing the price of commodities down. So diamonds are a real a shining light. Sorry for the pun in the mining sector, and in fact, I've thrown my own hat into the ring. And as I mentioned before, I joined Dunedin Ventures. DVI is their stock symbol. They trade on the Venture Exchange. I joined them as a special advisor to try to build a new player in the Canadian diamond scene. And so, yeah, I'm very bullish on diamonds, and Lucara is a really great diamond pick. LUC is their symbol. One of the gold picks that I wanted to take, but I was a little nervous if I could get the performance that I needed in a 6-week period to win this contest. The stock symbol on that one is DNA. DNA is Dalradian. Pardon me?
That's our good Irish friends, right?
Yeah, I'm getting them mixed up now. Dalradian. They've got a really great a gold play over in Ireland. They've had a bunch of big money thrown at them in bought deal financings. I'm a big fan of DNA. Was a little worried, is it going to get me the kind of performance I need to beat soundly thrashed George again this year? But sorry about that. Sorry about that, George. But DNA is another of my favorite gold picks. And then I also had, the last one was a silver pick, George. Bear Creek Mining. BCM is their stock symbol. They trade on the Venture Exchange as well. I wanted to pick a silver pick, but I overweighted myself in oil because I saw that even though the price of, I saw that oil prices had gotten dramatically beaten down, but the oil stocks were beaten down even worse. And the day before our contest one of my picks that I had on my list to pick for the contest was an oil deal called Talisman that got taken over. So as soon as Talisman got taken over, I changed my portfolio and picked 4 oil deals because I was looking for the next potential takeover candidate. So that's the kind of thinking that has to go into a 6-week contest. But these were a group of companies that I'm also very bullish on. And let's say it's the second string or the bench in my basketball team. And I think this is a pretty good bench as well.
All right, I'll tear through a couple here at my end that I liked. Lucrata Exploration, LXE on the Venture Exchange. $1.45, trades about 400,000 shares a day, so you know I like that. Take a look at the chart here on the right-hand side. I think these guys got, and then look, actually, back on December, they did hit a low back here of $1.28, and now they're sitting at $1.45. Good, either way, a great investment. It just broke through its 9-day moving average, so if you can pick it up between $1.40, $1.45, I like that one. Santa Cruz Silver Mine. You know this one, Allan, silver producer, right? There's its 1-year chart. It's really gotten beaten up, $1.50, $1.20 high, down to 37.5 cents. I like it, but again, do your own due diligence, right? I haven't checked these in the last week to make sure they haven't had any adverse press releases. Premier Gold Mines, PG, almost made the list. I know that one because of Allan, but always has a strong, strong comeback. And just look last year. Here it is back at the end of December. It was $1.36.
Actually, it was one of my picks last year, George.
Yeah, and look, by February is at $2.55, right? So that's fantastic. So I think it's oversold in the great company here. Avalon Rare Metals. I love this company for the long term. This is a company that you can put away, and sit on for 5 years. The reason it didn't make my cut is I didn't think it was going to have a big bounce back for contest purposes. But you can see here on the 16th, it was trading about 17 cents when I could have got it, and it's already sitting at 19.5 right now. So now it's actually performed pretty decently. But that's one you can put away forever. And the last one is BSM Technologies. I didn't pick this because it had already gone on a run, but look by here, look December the 16th, it already made its way to close at $1.40. I picked it up at $1.22, somewhere back here, and in fact just posted the other day that I sold it at $1.55, and I posted that that's how you pay for your Christmas right there. So that paid for Christmas present. So those are the ones that were.
It looks like if our contest started a week earlier, you might have been able to pick that one.
Yeah, I would have. I definitely would have picked it at $1.20. No doubt about it. So let me get off screen share here. No doubt about it that I would have picked it up. I would have picked it off at $1.20. But listen, you had one that didn't make it either, right? So because it already got bought out.
Yeah.
So that's the way it goes. But those are some other companies for you guys to be looking at, and not necessarily for 30 days. Just great companies to look at for the next 12 months. Good fundamentally strong companies that have low valuations, technically oversold, or starting to rebound a little. BSM I wouldn't buy now. I think that can bounce back. I'm hoping that's going to do a bounce back for me, $1.60, $1.25. I'm presuming that's actually going to happen with BSM unless they have a major announcement on that breaks them out. But otherwise, I'm going to be playing ping pong with them. But the other guys, and IDM, sorry, I didn't mention that IDM Mining.
Oh, yeah.
Cloud deal at IDM. I actually tried to buy 100,000 shares of that at 13.5 cents. Just on Christmas Eve there. Let me see what it's. I'm just gonna punch it up slowly.
Well, you know what? 13.5 cents, George. I think you're probably. I'll predict that of the next 52 weeks, you're pretty close to the low there, and sometime during 2015. You're going to have some very good performance on that.
Yeah, it's 14.5 now. 14.5 asking 15. So it's still early, but I think IDM is also. You couldn't get a 13.5 like me, but if you get a 14.5, you're probably going to do pretty well over the next 12 months, more likely. But set your stop losses. Remember, Allan and I are not telling you what to buy. If we have any positions in these stocks, we'll tell you about it and disclose all that. But otherwise, we're just talking about short-term stock contests for fun, and that's not necessarily, that's absolutely not the way anybody should be investing their money. So make sure you speak to your financial advisor, make sure you speak to your spouse, partner, whatever the case is, before you make any picks. But don't take these as solicitations for us trying to tell you.
Yeah, we're really just trying to help people to find good companies to go out and do your homework on.
Yeah, that's exactly
the only
it.
reason we keep track of everything is because we want to be compared to our peers. And I think one thing you'll find that's strange is that the peers don't really keep their track of things the way we do, and that's usually because they don't perform like we do. So the only reason I mention that is that we do know what we're doing, and we're trying to help you find good companies to do your homework. So
well, let me tell you something, buddy. You're sitting in that chair. Peter Granish was sitting in that chair a couple of years ago, and he absolutely imploded. He's out of the business. His people remembered, right? And pretty much everything he picked turned to dust. And the people will remember at the end of the day, that's for sure.
George, he isn't the only one. In fact, I've always got CNBC on here. I see a lot of those kind of guys on CNBC too. And you notice, George, that they never talk about all their picks. It's hard to find out who they've picked. With us, it's simple, it's easy. There's a reason.
Plus, I'm tracking all my trades on Profitly, right? Everybody knows that on Twitter. I post my trades, I timestamp them, I say buy, when I bought BSM, I say buy it at $1.22, and when I sold the other day at $1.55, it even went higher to $1.62 or something like that. But I said, be out of BSM, take your profit, good enough. So we're putting our money where our mouth is, and that's not what very many other people are doing.
Exactly. On that note, George, it's been a wonderful 2014. I just read somewhere the other day that everybody in the mining business is all down in the dumps. And I was going to tweet back to the guy who wrote the article for the Vancouver Sun out here that this has actually been one of my best years. The opportunities out there are just incredible. I'm fortunate to have, because I've been such a contrarian for so many years, I have some people out there that, pay attention to my contrarianism. And I've got some good backers there that think a lot like I do. And we saw an opportunity in diamonds that we've jumped on. And now we're trying to build a diamond player in Canada called Dunedin Ventures. That company has an advanced project in Rankin Inlet. I don't think we would have been able to get this project unless the markets were the way that they are. We're about to do the same thing with a gold company. We're going to build a gold turnaround play in gold where we've got a company that doesn't have a lot of stock out. It's one of those dormant companies, but we're taking over a dormant company that also has a good project, and we're going to pump some new projects into it, and they don't have a lot of stock out. So we're going to do it with gold, and then I've got another thing that's coming up, George, that will really show people that I'm putting my money where my mouth is. We're working on a venture capital concept right now that I'm extremely excited about, and really making a change in the industry that I think is needed. I always look for opportunities, and right now there's some great opportunities in a venture capital type concept for the resource sector. I see some structural problems in the sector that a venture capitalist can come in there and fix. And that's what we're going to try to do with that venture capital company.
When are you going to give more detail on that? When you unveil more details about that for the rest of us?
Yeah, well, right now we're in the process of incorporating the company and putting out our website and all our services and everything like that. I'll probably have it out sometime in January. What the point I was really getting at, George, is that it's these kind of markets that create the opportunity to set the foundation for the winners in the next bullish trend. Okay? And so I've got some backers that are going to enable me to do that. to build those things in a tough market and get ready for the next bullish market. And so, yeah, I'm extremely excited about what's going on in the sector right now. And I'm, in an ideal world, George, would I try to launch 3 companies all at once? No. But the reality is that's what these kind of markets create. They create opportunities where as soon as you put your head up, all of a sudden people are throwing things at you because nobody else is putting their head up. So we put our head up, and it's unbelievable the projects that we're getting to look at, and we wouldn't be able to do this any other time. So I'm excited about the opportunity to build things, and I'm excited about the potential that things are going to turn around in the not-too-distant future to take advantage of what we're building right now.
And buddy, we'll end on that note, because that's the kind of leadership that the whole space needs. People who are going to take assets that are severely hit and turn them around and put some smart people in some different structures and change the game a little bit, and at the end of the day create value for everybody. So looking forward to, especially your new venture capital model, looking forward to hearing more about that. Maybe we can when you're ready, have a whole show dedicated just to that for everybody in the industry.
Awesome. I'm looking forward to it, George.
Go Cowboys on Sunday. All right, we're in the playoffs. So Happy New Year to everyone at home, but especially Happy New Year to all our Cowboys fans. I'm not going to make any predictions. I'm just going to be sitting on the couch hoping that they can just keep extending the season and the good times. And Allan, I'm sure you're going to be doing the same.
Yes, me and George, one thing we do agree on, we don't always agree on our stock picks or our market calls, but we do have our same football team as our favorite team. That we have in common. We've been suffering for a good 20 years or so now, George, but it's nice to have a contender again. I don't know how far we're going to go, but it's just nice to see our Cowboys in the conversation about who could win the Super Bowl. So I'm really happy about that. Everybody have a wonderful New Year's. I hope you had a great Christmas, Hanukkah, Kwanzaa, whatever you celebrate. I hope you had a great one, and let's have a great 2015.
Happy New Year, everyone. See you in 2015.